All right, hi there. Welcome to Crypto Uni. My name's Adam, and let's talk about Jay Adkisson's contributor report to Forbes in 2017. So this is the bull market. Let me just bring it up here. Actually, let's get the Bitcoin rainbow chart going, so we can position ourselves here. Okay. So to give Jay some credit, Mr. Adkisson some credit, he was over here around this timeline. So let's get to, that's November, so around December, so right around this area. So obviously there was a lot less data on crypto and the cycles. There was really only one previous blow off bull market top that we saw, and then we were over in 2017. So let's talk about Bitcoin as a scam, and let's go over this and try to understand now that we have a retrospect. So we are currently at Bitcoin being worth, let's just use the rainbow chart right here. So it's 62,000 American dollars at the time he was writing at. We were maybe 14,000 US dollars. So Bitcoin's a scam. Let's go talk about why he thinks it's a scam, and also what we can learn from this. Okay, so outset, let me be clear, Bitcoin itself is not a scam. Okay, that's good, but how Bitcoin is being sold as a scam. But later on, even though he says these words, it's kind of interesting. Later on at the end of the article, let me just jump to there so we can kind of, will Bitcoin go away entirely? Probably not, because Bitcoin still serves some usefulness as a unit of exchange. The caveat here is that when the bubble bursts, the object of the bubble usually falls into a deep disrepute. So the reputation of Bitcoin will be gone. That hasn't happened. In fact, the opposite has kind of happened. It's being talked about in the 2024 election cycle by both Democrats as well as Republicans. It seems to be kind of a bipartisan issue. There's lots of voters now who own crypto, and they're in the swing states. But furthermore, we have BlackRock, Fidelity, Franklin Templeton, who are in the space now, who have created ETF, exchange traded fund assets, on Bitcoin, and that are actually using Coinbase to custodian those Bitcoin, actually going out and buying Bitcoin. And we can actually see, as of today, actually this is October 17th of recording, the past 3 days have been hundreds of millions of dollars worth of buying, almost $1 billion worth of buying since October 14th, 17th to the ETFs. So okay, and so by then the scammers will who prey on little investors will have moved on to the next big thing. It's a never-ending cycle, limited by the only number of available suckers, and that is a big number. So the Bitcoin is being propagated by the number of suckers, and there's really no other people in here who are really interested in Bitcoin other than idiots, smaller retail investors who are getting destroyed. Let me be clear from the onset too, that's happened a lot. There's obviously a lot of scams in the space, and I'll probably talk about that maybe, I don't know, part of this or in another video. Okay, so let's go into it. So Bitcoin's a number. Each Bitcoin is simply a number. Okay, cool. He makes a big point of things being numbers and numbers being infinite, and we'll get into that. I was kind of surprised by this, but let's just go with it. It's simply a series of digits with each number being assigned to each Bitcoin. And to illustrate, I can randomly pull out $1 from my wallet, which bears, so it's a unique identifier. And so no other bill should have that unique identifier for the dollar, the serial number. And a dollar is simply a unit of exchange. Okay. And then he talks about how people can privately agree. So from this unit of exchange that's a dollar, that's only worth $1 American dollar and will only ever be worth $1 American dollar. Although interestingly, with inflation, the purchasing power of that changes. But let's just kind of go with it for now. It's just $1 American dollar. It's worth $1 American dollar from the beginning of time to the end of time. And he kind of states that people could do something really, really stupid with this dollar for various reasons. And he kind of gives a case here of kind of like trying to buy golf clubs and hide it from your wife. But you could essentially, use the dollar and agree to purchase something worth $5,000 with a friend who knows you, and so you can both kind of like superficially value this $1 at $5,000, and then I mean, that's really his point there. And then you could do something later on to shore up with your friend and give him the extra money that's missing from the transaction. But it's kind of saying like you could do something like where you can both understand some sort of superficial, irrational value for the $1 bill. You can make it. You can agree upon two private citizens that it's worth 5,000. And in fact, just on his point a little bit, and I think he talks about this, collector's pieces, art pieces, a baseball that was hit by Babe Ruth, and it was his last home run. These things are just baseballs, right? And so they should only be worth a few dollars. But the history and the uniqueness of it makes it worth, in the eyes of many people, much more than the base value of the commodity. Right, so Bitcoin has no, so the US dollar has an intrinsic value of $1, and so with that, and interestingly, he goes on to here to say like, one of the reasons why I know my $1 has value is that I can go and buy like a $1 thing with it, like a coffee or a small fries at McDonald's or something for the dollar. And so let's contrast that with Bitcoin, which has no intrinsic value. It is just a number. I would actually argue that fiat currency doesn't have any intrinsic value either. It's kind of interesting, like the word intrinsic value on a philosophical point would be that it has value in and of itself. I would argue that the dollar doesn't have value in and of itself, being a piece of paper that has printing on it. It has value because of the context of which it's in, the fact that merchants will accept it, and that it is backed by, let's say, some sort of sovereign state, and their infinite debt as well. Okay, so same situation. So, and so then he kind of makes this interesting point, which I don't think is a correct understanding of Bitcoin, which is that I think he's trying to say like your wallet. So the way to think about this is your wallet is a set of numbers, and then that wallet owns a certain amount of Bitcoin on the blockchain, and whoever has the secret key to that wallet is the owner of the wallet, and there can be multiple owners if multiple people know the secret key. And the owner of the wallet is just the person who's able to make a claim on a certain amount of Bitcoin on the crypto network, the Bitcoin network. Sorry if this is a bit abstract, but I think that's a pretty correct understanding. So he goes on to say, like, your Wells Fargo account doesn't have any like intrinsic value, which I kind of agree with. But just with Bitcoin wallets, you can create them ad nauseum, infinitely. You can go to Wells Fargo, maybe open up an account. It might actually cost you money there, but let's just say you could do it for free. The accounts actually have no value. The identifier that is the account has no value, which I agree. So bringing it back to Bitcoin, understanding a wallet address has no value. So I don't know what the tension is here. It's the same thing. But having the secret key to the wallet address could have value, especially if the wallet owns some Bitcoin. And the same thing at Wells Fargo. If you're able to have like the key to your lockbox, let's say, or if you're able to prove your identity and gain access to the account, that does have value insofar as the account has value. If there's a gold bar is hidden in the safety deposit box at the bank that you can prove that you own, or again, that your account simply has like thousands of dollars, millions of dollars, whatever have you. So again, like the actual knowing the account number at a bank and knowing the Bitcoin wallet, of course, has no value. There literally is no value there. But proving that you're the one who owns that thing could potentially have lots of value. And so he calls them cyber currencies, which I actually think is quite funny too. Maybe cryptocurrencies at the point in time. I was definitely in crypto at this point in time, but I don't know if it was as ubiquitous maybe, but he's saying cyber currencies, so we'll roll with it. So he does say that the one interesting thing about cyber currencies, I should say, cryptocurrencies, let me go with that actually, is that you don't need a middleman to make the transaction. So you don't need a bank. You can just be two individual people or corporations or sovereign states or really anything, and you can use this network and transact in a robust and as of 15 years of progress unhacked way. So that's pretty neat. And you don't need permission, and you can send any number of funds that you would like. So again, pretty cool. So you can think of Bitcoin as simply a number is too simplistic. Okay, so you think of it as a money bag with a lock, the internet version of this. Yeah, okay, that what, fine. Money goes from transmitter to transmittee, and the transmittee gets a unique code to unlock the bag. What's that really worth? Again, Does it show the market cap here? But the market cap of Bitcoin, I mean, we can go to coin market cap. Let me just do, what is that worth as of, I'll answer you as of October. Where is the total market cap? Okay, here we go. So total market cap, and this is of all coins, I believe, is $2.3 trillion. Let's go into Bitcoin. Market cap 1.33 trillion. So Mr. Adkisson, it's worth $1.33 trillion. Hopefully I'm getting his name right. Let me just see here. Adkisson. Okay, it's not Adkisson. Okay. Anyways, and now let's talk about the uniqueness. So Bitcoin does have some value because there's only a finite number of Bitcoin available because the algorithm limits Bitcoin. Okay, and this I would harp on a lot about. He seems to really not understand what this is about. So let me just I'll just say it here, and then we'll go over what he's saying because I don't think it makes sense at all. It really isn't the Bitcoin that's the value. It's the network that's the value. It's the network where you can have ownership without permission and you can transact with any number of people without a middleman. And it's been battle tested for 15 years with open source code that hasn't been hacked. And conversely, the reason being paid in fiat, we're going to devalue that in order to do these initiatives. And it's like, okay, cool, but I'm not necessarily for that, or I'm already paying taxes. Now I don't want my economic value, my purchasing power to be deflated magically as well. And for the cost of assets to go up, I'd rather than put my purchasing power money after it's being taxed into a network where it's beyond these government systems, beyond these calculations, beyond this economic policy of adjustment. Again, that's the value proposition here. So Bitcoin's being unique and all this stuff is bullshit. It's not actually important. And I take his point that he's about to say you could replicate Bitcoin a million different times. In fact, Bitcoin Cash is a fork of Bitcoin. Bitcoin Lite is a fork of Bitcoin. We've had Bitcoin, or at least Bitcoin Lite, like use the Bitcoin code initially and just like modified it. We've had people and organizations who have multiplied Bitcoin, who have worked off it, who have forked it. That it's irrelevant. It's irrelevant to the value proposition of Bitcoin, a 15-year battle-tested, decentralized network of mutually disinterested nodes working together. And the proposition for an individual like me is that I can put my value there and not have it taxed away. and not have it inflated away. And if I'm worried about hyperinflation, and of course there's other parts of the story I won't go into, but let's keep going. So uniqueness. So just on Bitcoin being unique, that's what is going on. Bitcoin uniqueness has a certain value because there's only one Hope diamond. It's estimated to have a value in the neighborhood of 350 million. I'm pretty sure it's higher now. It's probably 400 million, given the bout of inflation we've gone through since then. Because there are only 100 of that 24-cent stamp of the upside down airplane printed in 1918, another pandemic year, they are estimated to be worth about $1 million each. And ditto for rare coins and Picassos and such. Okay, so this is a good point. Things being rare can tend to have value. And this is such a weird point. Okay, so I alluded to this. Fundamental Bitcoin value. It is simply a number, and numbers are infinite, and there will never be a shortage of numbers. I don't. Again, Bitcoin's value proposition is not that it's a number. It's that it's a network with physical infrastructure around the world that's been operating for 15 years, battle tested, open source, hasn't been hacked. People can transmit value. Now, if he wants to argue it's value that should only be worth 1 penny, which he does, or it's value that's worth X, Y, Z dollars, they can do that, and they can do that instantaneously. That's pretty good, I would say. So Bitcoin may be limited to 21 million numbers, but and by the way, Bitcoin is 21 million, but Satoshis are many, many more, because Satoshis are fractions of Bitcoin. So Bitcoin is actually an arbitrary. Bitcoin as a unit is kind of arbitrary in a way. We really should be talking about Satoshis here, in which case there's let's just ask how many. How many Satoshis are possible on the BTC network? So we have 100 million Satoshis. So, sorry, 2.1 quadrillion. Okay, so that's, quadrillion. So that's a lot. It's a lot of Satoshis. And that's like the basic, that's as small as you can cut down a Bitcoin to being. And eventually a Satoshi might be worth $1, in which case, a Bitcoin will be worth, I think it's like $1 million or over $1 million at that point, and the market cap will be insane, probably at the price of gold. Bitcoin isn't unique. Quite the opposite. As anyone who comes up with their own currency can begin. And so this is true. Like he's talking. This is a misunderstanding of the code. He's talking about the code being unique. It is not. It's actually the opposite of what I was saying. Is precisely because it's not private, because it is community run, and anyone can start these networks. In theory, that's what has value. It's off. It's not regulated in the same way. It's not owned by someone. It's not centralized. So it's kind of funny. It's actually, Bitcoin is open source, as many other bits of code are that aren't cryptocurrencies, and there's actually an advantage in doing that, but he seems to think of it as a disadvantage. I don't understand. Again, because he's conflating basically the value of Bitcoin with the code versus the network. It's very much like competing with technical cheeseburgers. Anyone with the necessary mathematical skills can cook one up. Okay, yeah. So and you know what? There was, I think he writes, there was like 1,300 cryptos at the time that he was writing. Now there's hundreds of thousands, if not more, crypto networks all over the place. People can spin one up. You can spin up kind of derivatives of different ones. You can simply fork or clone the code for many of them. As well as you can use ECR20 tokens on Ethereum and kind of create your own token, just piggybacking off the Ether network. And you can do this ad infinitum, and that doesn't actually make these networks worth zero. So what he's saying is bunk. But anyways, let's say that someone creates a cryptocurrency that is based on known prime numbers, and there are 50 million of those. So another 50 million cryptocurrency numbers could be created. Right. And so I take his point as well. So according to Wikipedia, as of November, so I guess a month before his writing, there's 1,324 cryptocurrencies. Again, I don't have to really prove this point. There are many more cryptocurrencies than what he's saying right now, and yet Bitcoin has gone up. It's gone up an order of magnitudes more than when he was writing. So this is irrelevant, and it's his misunderstanding of why the Bitcoin network and other cryptocurrencies, some of them are valuable, that leads to this point. And then he does some weird mathematics where because he thinks, I have to say that for someone who's supposed to be a professional investment and is writing this piece, to not have taken the time to understand Bitcoin, and again, I'll give him the credit of the doubt, there was less information. This is already basically 6 years ago, right? So I'll give him the benefit of the doubt on that, but still to have such a fundamental misunderstanding of the potential, and to just talk about Bitcoin as just code and it can be replicated, and then talk about numbers and as infinite, and then try to sell to your readers and Forbes, like it's disgraceful. It's very unintelligent what's being said here, and there's no way around it. And this is someone who hasn't done really the research, and has been primed and biased by other viewpoints, and is simply trying to push as far as they can, like to champion this viewpoint, even though he says at the beginning he's not doing that in a way, but he totally is. By the end of the article, it's just like Bitcoin's worth nothing, even though he says it is worth something. So numbers are infinite, and then the supply of cryptocurrency is infinite. So again, like, let me just add to what he's saying. Let me just bolster his argument. He's saying that theoretically we could create an infinite number of crypto networks. So that's already one infinity. And then there's another infinity, which is each of those networks could have, in theory, like an infinite or very large number of tokens. They could have an uncapped supply. So you've got a two-dimensional array of infinities now. You've got an infinity in terms of the number of cryptocurrencies, and then each of those cryptocurrencies, in theory, having an infinite number of token supply. Again, where is he going with this? It's to say that I don't understand why Bitcoin and some of the other ones are worth more than other ones. All of these things are just computer code that's running, and it's stupid people gambling on it. And anyone can because anyone could create a crypto coin, it therefore means that the value of all crypto should be split across all those coins and all the supply of all those coins. And so the real value is like a penny per any one token. So this is like not distinguishing between any of the networks, and claiming, because of what I would say is the virtuous thing about crypto is that anyone can create them. You're not left to a sovereign nation to decide your economic fate. You're not left to a payment network like a Visa network or MasterCard network or PayPal network to decide your fate. Anyone, any dickhead can come around, just like a website, and create a new website or a new network, a new protocol. He's therefore saying all of them are roughly the same value, so they're all worth zero. I want to say that, again, that this is an insane perspective. And if you were to think of it in terms of websites, it is absolutely insane. What he's saying is that because anyone can create a website, which again, I think is a good thing. It's a good thing that anyone can create a website and can have this kind of like freedom of speech, can express themselves in their own websites. Because anyone can create their website, there's going to be an infinite number of useless websites. And in fact, I will add to this, most websites, the majority of websites on the internet, both on the, I guess, light web as well as the dark web, are mostly just garbage. But he's somehow suggesting that because most websites are garbage, Amazon.com, Apple.com, USGov.com or whatever, gov.com.org or whatever, these things are worth nothing. But it's not true. There's a lot of effort that's been put into maintaining certain web apps and certain infrastructure. Another way of saying this is, I'm a developer. Developers could clone essentially Twitter, or make a Twitter clone, or make a Tinder clone, and an Instagram clone. And so because in theory developers, many developers make hundreds of these clones, Instagram's worth nothing or Facebook's worth nothing. It's an absurd argument. It's not the case. The value is not in the actual code itself or in the UI. The value is in the network that they've created over time, with the marketing, with the onboarding, and proving that they're a reliable company to provide the service, which again, Bitcoin has done. So it's just such a bad argument. It's so irrational. And even this is not even a crypto argument. I'm suggesting that he hasn't thought properly enough about digital products and digital services in general, because the same reasoning that he's applying could be applied to replicating code bases, forking code bases, or simply replicating applications like Twitter or Facebook and Instagram. But I don't think that he would readily suppose that they are then worth basically nothing, or that he would take the value of digital services and spread them across the infinite number of services that could be built, and then say, well, all of them are worth basically nothing because the vast majority of them are worth nothing. It's such a bad argument, and it's a lack of critical thinking and philosophy that I'm seeing here, and that's what's killing me. And but adding these equations to it makes it seem more legitimate. And so he's actually thought through this. He just hasn't been doing critical thinking. He's been doing thinking, it's just not critical, basically. Actually, it is some number larger than zero, and thus, so if you kind of divide, the current market cap of all cryptocurrencies, or let's say Bitcoin by infinity, you get 1 cent, because 1 cent is the lowest um, denomination of monetary value that we could get, and because it's not worth zero, we will round it up to 1 cent. So all of these digital tokens are worth 1 cent, and including Bitcoin. Again, just have to flip back over here and be like, well, it definitely crashes, but it's never worth 1 cent, and it keeps going up. It went from $226 US bottom to around 3.4K US bottom to now 18K US bottom. Where's the next bottom going to be? I'm guessing it's around $40,000, maybe $30,000, $30,000 to $45,000. It hasn't been zero, so he's gotten it wrong, right? He's gotten it wrong, and I think he's gotten it wrong because he's misunderstood and he's not spent enough time. This now brings us to the economic law of supply and demand. Okay, so they're pretty basic concept, a good topic, but pretty basic. Okay, so take the U.S. stamp, and there's only and so we go to tulip bulbs. Okay, awesome. So tulip mania was like 1600s, 1636, and a year later they crashed. He writes here, a year later they quit going up and the price started falling. So in a year or two, it completed the crash. So we peaked it started in 1636, 37 it had peaked and started falling, and then it never went back. So this is a 1 to 2 year mania that happened with the French, who were hungry for tulip bulbs. These are actually just the tulip flowers. And they were paying like extremely high market prices, and it crashed. And again, I just have to point over here. People were paying insanely high, $1,000. It's way beyond fair value. No one should ever pay for this. Crashed to $200. So, and this is already a 2 year period. So we're done our tulip mania comparison, right? No. Okay, it goes up again. Okay, but this is because people are greedy and stupid, and then it crashed, and it crashed way above. Like it landed way above the bottom over here at like 265. It went down to 3,500 or something, and then it goes up again. So I just don't understand the reasoning here of comparing it to tulip mania or the dot-com boom. Yes, there's speculation. This is why you get a parabolic bear rise. And I think this is a really good point to pontificate on. They are correctly looking at these run-ups when it gets into the news. And this is the part that irks me too about crypto skeptics in general. The news is telling you to look at this event because it's flashy. So you look into it during these times. You correctly assert that it's a bubble because it is. It is correctly a bubble. You correctly assert that. And then you quickly think up and talk with other people in an echo chamber about how this is a bubble and it's all worth bullshit. And you all echo each other's voices. Meanwhile, you haven't actually looked at what the network is, how it works, why other people see value in it, and you haven't tried to explain why the bottoms keep rising up. You haven't tried to explain any of that. You've just come by at the final hour, the 11th hour of these cycles. You're saying it's going to crash and that it's worth nothing, and you're not even trying to attempt to explain why it's crashed previously and that the bottom was lower than the previous bottom, and so on. It's just very lazy journalism. This is in the news right now, so you go, okay, this is very popular right now. I'm gonna write about it. I'm gonna talk about it, and then you do a kind of a hit piece, and it's a hit and run by the numbers, and you're done. And no one's holding these people accountable. So that's what I'm trying to do here in the series. It's like, look back and go like, okay, you guys had all these reasons and they're wrong. Can you explain to me now why they're wrong? And most of these people will just tell me the same reasons. They'll just say over and over again, it's a bubble, it's a bubble, it's a bubble. And it's like, well, I just want to ask these people, how long until the use of this, where it hasn't crashed, where it keeps kind of going up incrementally, how long until you reconsider? Because they're not actually doing a scientific analysis of this. They're not looking at the full spectrum of the data and trying to understand and test their theories based on it. It's very lazy journalism, and it's very lazy thinking, and I despise it in that way. Okay, so Deutsche Bank, reflecting the tool bubble. Okay. I think this is spectacular too. This is exactly what I'm saying. He quotes a November 2013 president of the Dutch Central Bank reflecting on the tulip bubble and says, at least then you got a tulip, now you get nothing, referring to Bitcoin. So our author here, Mr. Adkisson, is aware of the previous bull run. So he's at least aware fleetingly, I don't know if he looked at it, this bull run, and it's happening again. And yet he's, even though it went up, the low was way higher than $11, and it went to $200 as the low, and then it went up again. He's not factoring any of that in. He's just saying the same criticism of Bitcoin in 2013 applies here. There's nothing has changed. It's pretty wild. And then he's saying, and then because again he thinks he's smart. Well, Wellink wasn't exactly right that you get nothing, because you get a unique number on the Bitcoin network. So this is a very superficial view of why Bitcoin has value. I've explained ad nauseum at this point why I think this is wrong and that it has value, but it's just so shocking to see people so pompously and arrogantly kind of talking in this way about crypto. And again, let's forgive a little bit because we don't have as much data now, but you'll still see people talking about crypto in these ways, even after like doubling the amount of kind of like market data since then. So just wild. And again, do any of these people come out and apologize or say, hey, I've rethought it and I think I'm wrong? There are more and more kind of gray hairs, I will say, baby boomers who are coming online, who are becoming awoken to why crypto actually might be valuable. And it has taken them viewing this, and now we're over here, and they're finally starting to wake up and go, you know what, shit, I think we were wrong. But I looked up Mr. Adkisson's Twitter and stuff, which he's still active. He hasn't written anything nice about crypto. He actually has one article I haven't seen yet, which is saying some people are asking me to invest. Maybe they should, but I don't think that he's said, you know what, I got it wrong, basically. We'll see. You think people should be able to spot bubbles, and this is really good criticism. So again, this is mixed in. The housing bubble of 2007, the dot-com bubble. Yeah, people are pretty dumb, he's saying here, and that they keep falling for bubbles, and they can't seem to think correctly when it comes to market mania. I think he's correct, and that in my mind helps explain these parabolic bull runs. And so I'm of two minds here. When he gets things right, I'm saying he's right. I'm not saying everything that he's saying is stupid and that he's arrogant and he's an idiot. He is correctly identifying that people are bad at spotting bubbles. The only reason why, and I'm going to say this maybe multiple times throughout the series, by definition, when half the money comes in on a bull run, when at the halfway point to the peak of a bull run, half of the money is coming in when the risk factor is so high. We don't know what the top is, but it's getting higher. The outcome is that half the money comes in when there's only a 2x potential at that point. It's not known to the marketplace participants, but I'm just saying retrospectively that's what it is. They come in at such a high risk level for a potential maybe 2 or 3x their money. They're coming in late. So all the money that's building up the base of this thing is coming in potentially by multiple people over a small period of time. And then in a very short period of time, literally half the money that ever comes in the pump comes in. It comes in about a month to 3 month period. That's stupidity. So half the value that comes in is markedly stupid when it comes in. So I agree with this point. The only reason you get a parabolic bull run is because people are not thinking properly. Their risk to reward multiples are way out of whack, and they're acting on those, which I think is, again, he's correct about this. And it's funny how he says they're taking money out of their nice, safe FDIC insured deposit accounts, which is the American they insure up to 250,000 American dollars. So if you are a player in this game, let's not kid ourselves. Half of the American population has no money. They've got no money to invest. You can see it in the charts and the wealth distribution charts. Half of the country has no money. So really, we're talking to people who have money. They have thousands of dollars, if not tens of thousands of dollars, if not hundreds of thousands of dollars. And really, the only way that these peaks really go up so high is that some of these whales, some of these people who have a substantial amount of money, $50,000 to just throw $100,000, they actually start withdrawing their money and putting it into these markets. But to say that it's safe, FDIC, you're only insured for $250,000. The people who have a lot of money to lose, and this happened at Silicon Valley Bank recently, they're only insured up to a fraction. Federal Reserve banking means that the bank mostly plays with your money. There's some insurance on it, but if you've got $1 million, if you've got a company bank account linked to one of these banks, you could be shut of luck when they turn to you and say, our bank failed and we don't have the money. I don't know why he thinks that this is safe. Crypto is more risky, of course, than many other things. I will say that right off the bat. But the fact that you say that the traditional markets and financial instruments are safe is absurd. We've seen that they're not necessarily safe. So Bitcoin is not a scam. That's really nice. Technology behind crypto is not a scam. So he's saying blockchain isn't. But now let me tell you what is a scam. The scam in Bitcoin is in talking average man on the street investors into investing in Bitcoin by intentionally obfuscating what it really is, just a number. So he's got this totally wrong, actually, in my opinion. So by saying that the fact that it's just number is not actually just number, I think it's proven by this price action that we're seeing and the integration now into standard markets that it's not just number. And I've talked again about how it's a network, decentralized, removed from nation state, kind of a more trusting economic policy than most countries would have. Okay, into some super sophisticated investment by throwing out technical verbiage that surrounds cryptocurrencies, such as blockchain technology and peer-to-peer servers. Yeah, so I would say let's just take a list of some of that jargon. So it'd be blockchain, decentralized, permissionless, freedom, peer-to-peer, I guess maybe wallets, maybe even BTC and Satoshis. What other jargon do we have for crypto? I think those are the main ones. Like permissionless, unblockable, maybe unstoppable, like these types of ideas. So all those ideas, if you're not actually understanding what's being proposed, it just sounds like a bunch of exciting words that are a bullshit and account to nothing. And the current criticism of Bitcoin is that it still doesn't actually count for anything. It's kind of bullshit. I think the technology has yet to really take off, but I think we are seeing, again, adoption coming from nation states. We are seeing it from institutions, and they are understanding now. Specifically, the story of Bitcoin is not just the value of Bitcoin as a network that does all the things I've talked about. It's in relation to, we're seeing gold have a rise right now because gold is in relation to what? It's in relation to fiat currencies and other assets. It's not just the fact that Bitcoin's valuable in and of itself. It's that relative to other places where you could put your money and trust in other places, as that erodes and you look for other places to trust and to put your money, to store your value, places that have the potential to go up, Bitcoin is becoming more and more prominent. So it's kind of like Bitcoin has some value as being a network, as offering all these features, as not just being some weird number thing that he's talking about. But on top of that, its value is magnified and multiplied by the current financial context we live in, where nation states are running up massive debts they can't pay off. Retirement savings plan, we don't know what's going to happen with them. The demographics of the world are totally wonky now. We don't have enough young people to support our growth. Productivity is not keeping up with where it needs to be in order to see that growth and to keep the lifestyles of the millennials, of the Gen Z, at or above their parents. They're coming in below now. They're not able to afford as much. The wealth gap is growing. As you lose trust in these institutions, where are you going to go? That's the value of Bitcoin as well. But he doesn't understand that at all. He just thinks it's a random number you're speculating on. These technologies really accomplish only one critical thing, and that is to keep particular numbers particular to Bitcoin, but they sure sound like Star Trek level stuff. So he's just talking about the code implements a network. The network, all it does is move values back and forth in the network, and that's the end of the story. So it's bullshit. And if that was my view of Bitcoin and crypto, I would also agree with him. It's just not. I think his understanding is wrong and based off where we're going, and I think my understanding is probably more correct. But it's just so strange to see him write so strongly about these things. To push Bitcoin, there are a lot of internet gurus who claim to have inside knowledge. This is true. There are a bunch of scammers. There's a bunch of scammers in the traditional markets. There's penny stocks. There's and things like Enron that are famous. There's always scams out there. I think crypto lends itself more to scams, of course, obviously, and I think again there are reasons for that are inherent to the technology being kind of open source and open to everyone to start these blockchains. So it is open to everyone, and including scammers. So I'll take his point. This is fine. The answer is that those who trade in anything make their money on commissions for selling. This is a strange one. I think the exchanges are making money from commissions, but And then there's scammers. Scammers are obviously just trying to make money by scamming you and not even giving the value. But the people who are in the crypto space who are trying to make real commission, like exchanges, for the most part, I think they believe in they believe in this. Like they see this, so they're not necessarily trying to do a pump and dump. Some exchanges have, specifically, Mt. Gox, FTX, in a way, Lunaterra collapsed, Quadriga in Canada. Like there's a bunch of cryptocurrencies that collapse specifically, or exchanges, I should say, specifically in the early years more, but most notably, even more recently, FTX. They are taking the philosophy of crypto and this kind of anarchist approach, and because it's unregulated, which is somewhat the fault of regulators themselves not wanting to touch this stuff, they're operating in this space as deceptive actors. And I'm sure Binance and KuCoin and all these other ones are doing deceptive things as well and playing with customer funds, or at least have. But the people who are in the space sincerely, and I believe there's a few, and Coinbase might be one of them. Egg on my face when Coinbase Exchange collapses and there's a whole bunch of drama, but we'll see. But the people who are in the space, I think the people like me too, they believe actually that this thing's going to keep growing for the reasons that I stated. The traditional markets are not doing well. The kind of economic policy is not doing well. We're seeing right-wing populism spread across the entire planet because there's civil unrest. There's a bleak outlook of the future. That's what I think crypto is doing for a lot of people. That's why I think certain nation states, El Salvador, the Congo, have either made it legal tender, and a bunch of others have decriminalized it. Like they've made it totally like legal to use. It's not legal tender. We're seeing that because of this disillusionment and disenfranchisement with traditional markets and traditional investments and traditional economic wealth. So that's where we're seeing it. And the people who understand this narrative are not trying to do quick pump and dumps. Again, there's a lot of them. Crypto lends itself to that kind of view. So I would distinguish here between people who are being sold Bitcoin via how I'm speaking about it, which might not be common, and people who are trying to, watch the Crypto King or something like that and just trying to double their money in 2 months. I mean, I think let's just say it this way, most people, if you're being told by someone that you can double your money in 3 months, 2 months, 2 weeks, and you're being led down this path, and you're kind of, excuse me for saying this, but if you're kind of dumb enough to believe that, you don't need to be scammed by crypto. You can kind of be scammed by anyone at any time with anything. This is the cycle of salesmen. So I think we should distinguish this between people who understand what crypto is and have a theory as to why it's rising up, and then they talk to the average person. They say, "Hey, you know what? This might not be a bad place to put some of your money." But again, the people who are pulling out money, taking out loans to put into meme coins and stuff like that, of course they're not thinking properly. Like, this is really bad. So Bitcoin's a pump and dump. Again, I would just like to ask, like, if Bitcoin's a pump and dump, why does it keep dumping at it keeps dumping and stabilizing at a much higher level than its previous level, and then goes up again? Like, if it's a pump and dump, it is the world's largest pump and dump ever. I mean, sure enough, getting away from the wealthy folks who have spare cash to speculate on, we're now seeing pooled funds set up just so that the average mom and pop investor who are simply trying to set up some money for retirement can throw their bucks into. I guess this is the idea too. It irks me that they're saying the mom and pop investor, I shouldn't be doing this. In fact, my view of crypto right now is that the average person should be putting in more money into these places, because they should not trust what's happening with the explicit tax of the government as well as the implicit tax of monetary policy. They should not trust their governments in terms of how they're going to manage the books and pay off the sovereign debt. America, let's just look at, yeah, this is from the US government itself. Can we get our beautiful chart here? Here we go. Yay. The growing national debt. This is, by the way, inflation adjusted. So that's scary as fuck. It's not, you can't explain half of this from being inflation. This is literally the debt dollar for dollar as being at this area, and now 100 years ago, and now being at this area. And look at what happened since 2008 onwards in the pandemic. You see this? Like, this is one thing to say, like, the slope, but this is just parabolic at this point. It's insane. After 2008, I don't think people should trust the governments to do what's best. I think the governments are printing out money. They're They've got a bunch of lobbyists. They are not working necessarily for the average American person, and the average American person and person around the world is not smart enough to understand what's actually going on. They don't actually understand the relationship with inflation and debt and bonds issuance. And I'm not saying I'm perfectly understand, but I understand enough right now to say, hey, my understanding here tells me that this uncontrolled by government network, decentralized network, permissionless network might actually be of interest. Okay, so we got, again, I think this is the thing, just think about Ponzi schemes. Like once Ponzi schemes collapse and it's made known the world over that people people don't go into the exact same Ponzi scheme. If Bitcoin's a Ponzi scheme, why do they keep going into the exact same Ponzi scheme? And why are big institutions going into it now? I guess big institutions, smart money is really, really dumb at the end of the day. I think he's misunderstanding something fundamental about crypto, and it's plain to see by how he's writing. And so I think this is right. Limiting your portfolio to about 2% of hyper risky assets like Bitcoin, that's probably right. For me, I would say it's something like 5 to 10%. The average person should have exposure to something like crypto because of the potential of what it could do for them long term. And I think BlackRock and Larry Fink has spoken about on Fox News recently about how he views it like that. It's like if you don't trust regular monetary policy, you can go into gold, for example, but why not go into Bitcoin? It's making moves much higher than gold over, much stronger. And you're much likely to buying high and end up selling low. And so again, this is a good point. Again, by definition, every time we see the parabol run going up, half the money that comes in in a 3-month time frame at the very end when they shouldn't do it, when the risk is very high, and all those people get wiped out, and they provide exit liquidity for the people who've been longer. So eventually it will fall as its novelty wears off. So again, I don't know, did the novelty not wear, like isn't his argument already applicable because the novelty, it fell several magnitudes from 1,000. It fell like 88% or whatever over here. Wasn't that enough for the novelty to wear off? But no, but I guess we're going to go up, and then okay, now the novelty's worn off. Okay, no, we're going to go up again. Now the novelty's again. We're about to go. I don't think this argument makes any sense. It's just not true. Like it makes sense. It's factually not true. And couched within the facts that are going on, it's weird why anyone would talk about this. Many of the original investors have already cashed out. This is another thing that I found interesting. It's like, and maybe I'm talking out of two sides of my mouth here, I think he would be the type of person who would say, hey, if you had your money go from $4.6 to $1,200, if you were buying it at these levels, you would be stupid not to sell. And especially because he's saying we have identified a bubble. So first of all, he's critiquing people who didn't identify a bubble. Then he's saying that the people who got in early and agreed with his point of view, hey, it looks like we're in a bubble, maybe I should de-risk and cash out and I shouldn't have so much in Bitcoin. Now that they've done that, he's saying that they're scammers. So they've done a logical thing on his playbook, and I think it also is a logical thing. I think that you shouldn't just hold indefinitely. You should probably be aware of when things are hyperinflated and exit out of some of your positions. So people who are being sensible and rational on his worldview, and I think my worldview as well, he's now critiquing them for having done that. It's just like there's no win fucking solution. The original investors have already cashed out and now want to try other big things. This is kind of weird because the next big thing, guess what it was? It was Bitcoin. And then it was Bitcoin again, or crypto, and now it's going to be Bitcoin again. So there isn't a next big thing. It is crypto, and the reason why crypto is always the next big thing is because it's actually not a Ponzi scheme. In my point of view, it's because there's something actually going on there. So again, my view helps explain what we're seeing. His view seems to be convoluted and actually contradictory in some points. Yeah, and so and this is, we look at what happened with Wall Street bets too. The fact that we're saying Wall Street and venture capital community keeps making good money while mom and pop investors come to the table late and eat the losses. This keeps happening in traditional markets as well. How much is there there's insiders selling like first dibs from venture capitalists, from insiders to get in on, let's say, Facebook stock before it eventually releases, or Coinbase stock. I mean, retail investors are getting dunked on everywhere. It's not just crypto. I'm not excusing crypto for doing this. I'm just saying you're getting dunked on all over the place. It's not just the cryptocurrencies. And then here he goes, will Bitcoin go away entirely? Probably not, because it can serve some usefulness and use a unit of exchange. to the extent that it can convince merchants to accept it as currency. So this is again a really early talking point that's never left. If I can't get merchants to buy my Bitcoin, if I can't eventually buy a coffee with Bitcoin, I still talk with colleagues today about this. If I can't use it as a peer-to-peer network to buy my traditional retail, normal, residential, civilian things, it's a failure. This is a misunderstanding of what the Bitcoin network is proposing. Again, with all that talk about national debt, with all that talk about sovereign state debt, with all that talk about a different asset class, if you don't understand any of that conversation, you're just saying it's a place to move numbers around and to buy stuff. And as long as if we can trick merchants into using it, then it's worthwhile. Of course, it's almost worth nothing. It just is. Like if this is what Bitcoin is, his points are entirely right. The problem is he doesn't understand what Bitcoin is, so all of his points are missing the mark. And he's made a claim here, a premonition that simply seems to not be true. The object of the bubble usually falls into deep disrepute, so it's going to lose its reputation. Well, look, before he even wrote this, it already fell massively. It had the biggest fall it's ever had. After he wrote it, it had a fall again. After he wrote it, had a fall. We keep going up. His theory is missing something fundamental and is not matching the data. Even when he was writing this in 2018, it was already clear he could have already hypothesized that, yes, although it could basically go to zero, it could actually do what it's done here and come back after it crashes at higher highs and higher lows. But he didn't do that. I don't know why. Why he didn't look at the 2013 data, look at 2018 and say, hey, it could go at least it could go either way if he wanted to make it a 50-50, which I don't think is a rational way of looking at it, but sure. Yeah. So again, are we ever going to see really Jay Adkisson saying, hey, I got this wrong? Probably not. Will he ever actually look into Bitcoin seriously? He might eventually in the future. We'll see. And it would be interesting for me to do an update on here and to see if he's kind of come around. He doesn't have to say Bitcoin's great, it's the next big thing. He just has to understand what it's actually doing and why people are finding value in it and why governments and why citizens are actually looking into it. Citizens around the world and in developed countries are looking at it and are intrigued. Right now, he's kind of calling them all an idiot, and he's saying, well, I'm pretty smart. These people don't understand that it's just numbers, and all these people are pretty dumb. They're just being fooled by tech bros who are just telling them these flashy buzzwords. Again, a lot of that, especially in the parabolic bull run, is that happening, and it's going to happen again. But it does not at all explain why the Ponzi scheme keeps existing. Maybe he's going to say it keeps reinventing itself. Why institutional interest is starting to rise over and over again. Why MicroStrategy is doing so well. Why the U.S. government, both the Democrats and Republicans, are taking it more seriously now. Why the price action has continued to grow and the market cap continued to grow. Why it's outperforming gold. Like, he hasn't described any of this. And meanwhile, he's derided anyone who's looking into crypto. He's basically called them idiots. Early investors to people now, and he's saying that he's kind of better. He understands what's going on, and his explanation, by the way, is pretty pitiful. So the whole thing is very disheartening, and I'm looking forward to talking more about this. And I think next we'll watch over the Bill Maher interview with one of those, the TV star from the OC. I forget his name, but this was a more recent one. So this was after the 2021 collapse with FTX, spectacular, massive crash, which I watched. Definitely horrible vibes in the space, to put it that way. And we'll go over that video and the reasons he gives why crypto's a scam. And we'll see if he or Bill Maher, who I like, I'm a fan of Bill Maher, but we'll see if they actually understand crypto in any more robust way. Spoiler, I don't think they do. Until next time, this is Crypto Uni. I want you to increase your economic knowledge and to do your own research and hopefully join in on crypto when you are ready. Take care.